Hi everybody, this is Ellman, the blue collar investor, with today's covered call writing question of the day. Today's question comes from Todd, who asks, when I look at the options chain for QQQ, I see multiple options for a given strike. I don't see any differentiator in the Yahoo Finance options chains. Can you help with this? Well, Todd, I definitely can. Certain heavily traded securities, like the Qs, have not only monthly options, but also weekly options as well. So for any given contract month, there'll be multiple expirations for every strike price. Now for those members who are not familiar with the Qs, they're an exchange-traded fund that represents 100 of the largest non-financial companies on the NASDAQ exchange. And it's an exchange-traded fund that I use frequently in my mother's account. So let's take a look at a few examples of how we can differentiate these different strike prices. First, on the screenshot in front of you, let's take a look at the Yahoo Finance options chain that you alluded to in your question. And here you could see on the Yahoo site that we have two $66 strike prices that are highlighted. Now, if you take a look at the ticker symbol next to those strike prices, you will see that they have different expiration dates, one being January 19th, the other being January 25th. Now, one would expect that the further out expiration, which would have more time value, would have a greater premium, which we could see in the bid column. The 25th has a premium of $1.03 in the bid column, and the one that expires on the 19th has a bid of 73 cents. So on the Yahoo site, the way to differentiate is by looking at the ticker symbols and then the expiration date within that ticker symbol. Let's look at another example. The next screenshot shows you the options chain found in the Invest Tools website. Here I've highlighted at the bottom of the page the expiration date being March 8th. The way they do it in Invest Tools, they will give you all the expirations for a particular date and then at the bottom list that date. They don't have the ticker symbols. So, for example, you only see strike prices for one strike price per expiration date. So it's the way to find it in Invest Tools is to simply look at the bottom of the options chain. That will give you the expiration date, and then if you scroll down further, you'll get the further out expirations. Let's look at one more. This is the one taken from USAA brokerage. That happens to be the brokerage that I use. And you could see on the screenshot in front of you, again, two $66 strike prices. How do we differentiate? Well, in the case of USAA, they will actually give you the expiration date adjacent to the strike price. So here we see one being March 1st and the second one being March 8th. And if you wanted to take a look at the bid prices, once again, you would anticipate the further out expiration, the 8th, would have a higher bid price than the one that expires on March 1st, and in this case it does, $1.45 compared to $1.25. So, Todd, there you have it. There is a way to distinguish between the different strikes. There's usually a reasonable explanation, and it's normally related to the expiration date. So, Todd, you've asked a very, very important question. I'm sure many of our members have thought about asking this also. So, hopefully, you and all of our viewers have benefited from this question and my response. As always, this is Ellman, the blue collar investor. Take care, everybody.